Welcome back to the channel, everybody. I am Mick Alphanine. It's an honor to be in front of you once again today. Let's get to this first article here. And it is from the cryptopotato.com. This is a potent article. It's titled, Tokenized Treasury Market is Worth Over $600 million. But wait, that's not it. It says here, right below, RWA, real world asset tokenization, is forecasted to hit $16 trillion by 2030. We continue time after time to hear about the trillions. Oh, I just got shivered. I got chills just then. And all the chills were shaped like bars of gold. Let's read this little tidbit here and become a little bit more well-informed. It says here, despite being in the early innings of development, tokenization of real-world assets has gained significant traction in recent years, attracting users and large institutional players alike. A new study suggests that RWAs have emerged as the 10th largest sector in DeFi, based on protocols tracked by DeFi Llama, climbing from the 13th spot around a month back. Binance Research latest edition stated that, quote, the rise in the ranks of RWAs as a sector is a testament to the increasing adoption of RWA protocol. Moreover, the newly unveiled, well, they go into USDT. I'm not concerned with that at all. We know where this is going. Who do you think is going to dominate when it comes to the tokenization of real world assets? I think it's only logical to draw a correlation between the tokenization of real world assets, the trust that those institutions who can do that en masse have with particular companies. And there are no companies that are more trusted right now when it comes to the tokenization of real world assets more than the bank coins. They're already testing them in various ways. You have Franklin Templeton, Wisdom Tree with Stellar, myriad of central banks that we've heard directly from Ripple personnel are dealing with Ripple in the XRP. There's no one more trusted than them. Algorand, beloved by banks and real estate companies, right? You have like Lofty AI, the medical industry. Algorand's in there as well. And now we hear Quant. Quant is in there as well. So make no mistake about it, just my humble opinion, right? You could disagree with me. I will respect that. That the bank coins will dominate when it comes to that $16 trillion. It says here, currently, there are more than 41.3K RWA token holders on the Ethereum blockchain. The figure represents 130% increase from the 17.9K recorded at the beginning of the year. Once again, I take all of that, those numbers, and I apply them to the bank coins as we are ever expanding, and will dominate when it comes to those particular things, in my humble opinion. Tokenized U.S. treasuries is yet another aspect that has gained prominence in the RWA sector in recent times. The term, quote, U.S. treasury pertains to the debt issued by the U.S. government. Wait, now there were some things that happened recently with debt. Did you see it with the IMF? I won't go further than that. Let's continue on. This is which is known for its role as a benchmark for risk-free assets in traditional financial markets. As interest rates have been on the rise, the yields on these treasuries have gradually climbed, surpassing DeFi yields notably. But we know that. We follow that like during most of the months in the spring into the summer, you know, all the T-bills and T-bonds and things like that, and the disgusting yields that they issue right now. So $16 trillion. Let's move on from there. All right. So now this next article here is from U.Today. How you all doing out there? You doing okay? I hope that you are. It says Ripple unveils its total XRP holdings in report. It says here, it's from U.Today. If I didn't say that already, American blockchain payments firm Ripple Labs Incorporated has released its Q2 performance report, showcasing the total number of XRP coins it has in its coffers. As the company revealed, its ownership of XRP falls within two broad categories, including the XRP in escrow and those it currently holds as a firm. It says, as of the end of the second quarter in June, The Brad Garlinghouse-led company said the total XRP subject to on-ledger escrow is pegged at 41,900,000,005, while total XRP it holds as a company at the time was pegged to 5,551,119,094. This figure compares to the escrow-bound XRP as of the end of the first quarter in March, which comes in at 42,800,013. The difference is accounted for by more than 1 billion XRP tokens it released from escrow in that quarter. However, the company grew its total XRP holdings as the Q2 figures are a slight step up from the 5,506,585,918 is said it holds at the end of the first quarter. It says here, Ripple debunks misconception in XRP ruling, but we're not going to get into that right now. So now we have a little bit more information and data if you need to add that to your notes, right? This next article is also from U.Today. As a matter of fact, the next two are. So this article is titled, Ripple's Legal Chief Unravels XRP Verdict Drama in Terra Case. Let's scroll down here and see what they're talking about. It says, yesterday's courtroom developments sent shockwaves through the crypto community as Ripple's legal battle took an unexpected turn in connection with the ongoing Terraform Labs lawsuit. Is that so? I don't understand. Well, they're going to clarify here. Let me just continue. It says, in a surprising twist, the court rejected U.S. District Judge Annalisa Torres' previous decision that Ripple had not violated securities laws by selling XRP. I thought it was a little bit different what I read, but let's continue on. Because while Do Kwon and Terra seem to be the focal point, that's what I'm talking about. So, I mean, how much does this actually have to do with XRP? It has a lot more to do with Do Kwon and Terra, in my humble opinion. It says, seemed to be the focal point. It drew attention to Ripple and XRP saga. Why? That court case is over. It says the SEC currently pursuing a lawsuit against Terraform Labs and its co-founder sees the opportunity to challenge Judge Torres' ruling in the Ripple case, indicating they filed. But what is the purpose, the substance of it? The aim of it is at Terraform Labs, not XRP, not Ripple. They can take what was said, what is already established, and they can still have wiggle room to utilize certain verbiage and movement against Terra Labs. So that's what they're doing. It says, missing point. The news sparked up an uproar, particularly among the XRP community and Ripple representatives. Stuart Alderati, the crypto company's chief legal officer, was quick to clarify the situation. Without directly quoting him, Alderati emphasized that the recent ruling in the Terra case had no impact on the established verdict that XRP was not a security. That's what I was saying the entire time. It's quite clear to me. This is why it's important to control one's mind and emotions. Words can stoke a fire in you and bring about irrational behavior. You immediately get afraid and upset. And that's not good. That's not healthy, in my humble opinion. I mean, people can do with it whatever they want, but it's better to stay at a neutrality, keep yourself calm, do a little research, look a little further into it, wait for the experts to speak, and then maybe your mind and heart will be calmed. No need to be panicky, just my humble opinion. Remain balanced, remain neutral. No need to let that fire blaze within you. Have no fear. In life, the greatest things will be conquered through fearlessness. One does not need to be ignorant, and you can operate with caution. But caution and fear are two different things. One born out of ignorance, fear, right? No disrespect. But one born out of ignorance, fear, and one born out of the utilization of intellect, which is caution. Sure, proceed with caution, but that also allows you to do research. It also allows you to come by way of the truth. And then everything is calm once again, right? So here you have Alderati stating same thing that I thought when I read this. It says, he stated that the Ripple ruling was grounded in comprehensive factual record developed over 2 years. Yeah, the other judges don't have that kind of time to look at the case like the Honorable Judge Annalisa Torres did. So I wouldn't think that that would have the same weight or hold the same weight as a judge who went over everything with a fine-tooth comb and has access to information that others do not. And has a firm understanding that goes far beyond the understanding of armchair judges, no disrespect, armchair judges who have been just reading superficial information on the sideline. That's how I look at it. Let's continue on here. Says he stated that the Ripple ruling was grounded. Okay, we read that part. It says while the Terra case was just beginning, leaving room for the SEC's allegations to be initially accepted by the court. Initially, you see, it says just beginning. We'll see. I mean, I'm not going to see how it progresses. I suppose if I hear it through the news media, but other than that, I won't be following this. I have no horse in that race. Alderati also pointed out that the Terra judge may have misunderstood the reasoning behind the Ripple judge's decision. This is what I'm saying. That judge couldn't possibly have all of the information. It's just not feasible. So specifically regarding the involvement of secondary market traders. According to the officer's statements, these traders cannot be considered investors if they lack crucial information about the parties they are transacting with. I thought we went over this before, but he's making it quite clear. This ongoing legal drama has raised numerous questions and stirred speculation within the crypto industry. I don't know why. He just put that all to a close, in my humble opinion. So that is that. As far as I'm concerned, we move forward in strength. Spartans. That's what I consider us, Spartans. No retreat, no surrender. We continue to swing our swords, hold our shields high, and move forward in strength in everything that we do, not just crypto. This is way bigger than crypto, in my humble opinion. When we're here together on this channel, it's much bigger than crypto. We're growing together. This is bigger than crypto. So we move forward in strength together through anything in life, and we conquer everything in life. Whether it's your company, we're going to grow that, right? I mean, you're going to grow that, but you get what I'm saying, right? Whether it's your company, you're going to grow that. You're going to win. Whether it's if you have a job, you're going to get a raise. You're going to get a promotion. We're going to make it happen. That's us, Spartans. Something, maybe it's an ailment. We're going to fight the ailment in strength. You're the champ. You can do anything. So Spartans, move forward and conquer. All right. This next article here is from ledgerinsights.com. It's a little Stellar related news, and I think you'll understand why. It says this here. Franklin Templeton plans blockchain money markets funds on Avalanche, Aptos, and Arbitrum. But wait, let's scroll down here. What they're saying is, because there's no guarantee of that they're going to expand on those chains when they're already using Stellar. But wait. What it indicates or implicates is that they're looking to expand. Now, wait, just a few videos back, if you watch those XLM chapters, one of them was about Wisdom Tree. And Wisdom Tree was saying what? They were saying they were looking at, and I'm paraphrasing, of course, a rapid expansion of the Wisdom Tree Prime app, which is built on what? Stellar. Now you have Franklin Templeton saying the same thing within a 2-week time span. I mean, what is the possibility they're all moving forward at the same time? I mean, it's just rather suspicious. It couldn't be 6 months apart, 4, 5, 3 weeks. No, 2 weeks, like 2 weeks apart. Maybe not even that much. But it says here, Franklin Templeton's $300 million tokenized money market. The Franklin on-chain U.S. government money fund is primarily issued on the Stellar public blockchain. So why would you not just expand those capabilities? You have Soroban right there, right? So, I mean, it's something I'm keeping my eye on. It says in April, it expanded to Polygon. And now, which makes sense in my humble opinion, is Polygon offers bridges, right? That's primarily what it does. It says, I believe. It says, and now it says it may also issue tokens on the Avalanche and Aptos blockchains and the Arbitrum sidechain that's linked to Ethereum. Alongside fellow asset manager Apollo, Franklin Templeton invested in Aptos Labs. The startup was founded by part of the team from the abandoned Diem stablecoin project initiated by Facebook. The blockchain diversification of the tokenized fund is working gradually. So far, the fund, gradually, everything's starting off so slow and small, but it's growing, and they're letting people know their intentions to grow this. I mean, listen, I think everything at its potentiality, and I've said this time after time after time, I think everything happens in degrees, although if it happens all at once, I'll take it. But this may take a few years for everything to reach its potentiality, and of course, there's still a lot of roadblocks as well. But when it does, this is much bigger than what people think it is. And I'll say this also. In that next members-only video, there is a very potent piece of information there. A very potent piece. I'll leave it at that. let's continue on here. So Franklin Templeton has been providing a discount related to expenses to make the tokenized fund more attractive. Without the subsidy, it would charge 0.89%, but it limited the fees to 0.2% with its contribution due to expire yesterday. Asset managers competing with startups. One of the reasons for the ongoing subsidy might be the serious competition from startups. While Franklin Templeton is a regulated investment advisor and broker, most of the startups are not. For example, Ondo Finance, also they're getting pushed. That's great. Competition is great. Ondo Finance is both offshore and unregulated, but has attracted more than $162 million to its tokenized fund. Listen, the legacy system is getting in position. Once they have the positioning that they desire, then everything's going to be unleashed. You see them going for spot ETFs, things like that. They're moving at a lightning speed, especially because the legacy financial system is on fire. They're doing terrible right now. It's unbelievable. So they're looking for a liquidity cushion. They're looking for something where they can save capital, make capital. And so this is pushing them to move faster on the timeline. We all have different timelines, right? So the underlying assets of the Ondo iShares ETF are invested treasuries, whereas around 3/4 of the Franklin Templeton FOBXX portfolio is in Freddie Mac securities. Now, keep in mind that Stellar, XLM, things like that, XRP, they're going to be operating as layers underneath everything. Everything will flow across them when the time is right. Algorand is their quant overledger. So they're beginning to piece everything together. If you're keeping up with the activities of the central banks, all of these giant hedge funds, they're all getting involved with key pieces. They have bridges, Polygon, the gateways that are not blockchains like Quant. They're getting in deep with them. The bank coins, you have the smart contract platforms. So we're truly seeing MBDCs, MCBDCs forming right before our eyes. So I just wanted to put that out there in front of you, okay? We'll keep up with that because anything that happens with Franklin Templeton that could affect Stellar might be major. So now we have another article here. This one is from U.Today and it's titled Hedera Network Embraced by Hyundai and Kia for Innovation. So Hedera continues to do big things. It says here, Hyundai and Kia, two major automakers, have embraced the Hedera network, indicating an increase in blockchain adoption. According to an exciting announcement, Hyundai Motor Company and Kia Corporation have introduced a CO2 emission monitoring system based on the Hedera network. They have the actual tweet here from HBAR Foundation, which says, we're excited to announce that HMG Newsroom, the largest car manufacturer in South Korea, and Kia have introduced an AI-enabled supply chain carbon emissions tracking solution on the highly scalable Hedera network. It says, the HBAR Foundation revealed in a blog post that Hyundai, South Korea's largest car manufacturer, and Kia have launched an AI-enabled supply chain. They reiterate what was from the tweet. It says here, using the Hedera network, the blockchain-based supplier CO2 emission monitoring system, the SCEMS, would manage the carbon emissions of business partners, which means fines. Remember we talked about this long ago? Fines are going to flow across their payments for how much they can use. There's so much control, but with that control comes a lot of capital flowing across chain. Possibly, no guarantee. So the successful integration of the implementation with Hedera would also assure data integrity and transparency through the supply chain. Yeah, they'll be able to see everything, right? It's what I was saying also with XRP, Stellar, and payroll. When payroll rolls across there, or any types of payments, they want to know where that capital is going. It says, according to the blog post, Hyundai and Kia have successfully validated the functionality of Hedera's network and have decided to use it to achieve their essential goal of gathering carbon emissions data in a timely and secure manner. Now, with so many big names on that Hedera governing board, is it hard to fathom that a great deal of them may use Hedera in the same way, right? So it says here, Shinhan Bank, Taiwan's largest financial institution and South Korea's oldest bank, conducted an international remittance trial last week, verifying Hedera's feasibility for EVM-based stablecoin issuers worldwide. So you also have that going on. So Hedera making big moves right now, HBAR, making huge moves, right? And I'm here for it. Right? I'm deep in all the bank coins. I want all of them to win. No matter which ones win, I win also. So I'm cheering for all of them. They've been doing a great job. Just my humble opinion. Not financial advice. Nothing in this video is financial advice. I want everyone to always have their minds free and make decisions for themselves. I'm not here ever to influence anyone. I'm not an influencer, and I am not here to control anyone's mind. If I'm going to do anything, I'm going to free the minds of the people that watch me and hope that they already have their minds free and they don't even need anyone to free them. All right. So now let's move on here to this article is from Cointelegraph.com. We must pay attention to what is happening economically on a global scale. This article is titled, India Makes Suggestions for G20 Crypto Roadmap. It says here, the country emphasizes the necessity of dealing with the risks of digital assets in developing economies. India, which currently holds the Group of 20 presidency, has supported the Financial Stability Board's FSB, we're familiar with them, recommendations for a global crypto framework published in July. The country also emphasized the necessity of dealing with the risk of digital assets for developing economies. On August the 1st, India released its presidency note for input in a roadmap on a global framework for crypto. The document concurs with the guidelines written by the FSB, the Financial Action Task Force, FATF, and the International Monetary Fund. However, the note suggests some additions, including an emphasis on developing countries. While the IMF pays attention to developing economies specifics in its potential guidelines for crypto, India urges the FSB to implement them as well. It also calls for outreach to all jurisdictions to, quote, generate awareness risks, unquote, starting from countries with higher crypto adoption and extending the future regulatory approach to digital economy beyond the scope of the G20. Wow. As revealed in the note, the so-called synthesis paper by the IMF and FSB is due to be released at the end of August and provides a broad roadmap to be considered by the G20. In July, the FSB published its guidelines for crypto and stablecoins. The FSB states that crypto platforms must segregate clients' digital assets from their own funds. Reasonable, in my humble opinion. It says, and clearly separate functions to avoid conflict of interest. I also agree with that. All right. So they're pretty reasonable so far, with regulators ensuring tight cross-border cooperation and oversight. And let me tell you, there's a lot of major things going on. We've covered it for quite some time with the bank coins in India. Of course, it's very interesting that around the world, the bank coins have been tested by a myriad cadre, a bunch of, to use different wordings, banks around the world, but it's kept so quiet. Interesting, is it not? All right, so now we're going to move on from there. Another piece of very, very potent information here. This is from Watcher.guru, and it's titled 10 U.S. sectors to be affected if BRICS launch new currency. So now let's scroll down here. It says the BRICS summit is scheduled on August 22, August 22nd to 24th, and the bloc of 5 nations will gather in South Africa for the event. The summit is closely watched as discussions could revolve around the launch of a new BRICS currency. Well, they've kept it mixed as to whether they're going to make any sort of significant announcements. Of course, we have a few of the BRICS nations saying, hey, yes, we're going to discuss this there, but that doesn't necessarily mean that that information about what they discuss is going to be put out. However, I think what's important is the inevitability of a BRICS nation currency. The US dollar is in bad shape right now. All right. Tons of countries around the world no longer want to use the US dollar. There's dollar dumping going on. Look up all of these things. Don't just take my word for it. See it for yourself. Then you have the BRICS nation activity. Now you have a huge situation going on in Africa. I don't know if you're seeing that or not. I have no idea what's on the mainstream news, right? But I think a large portion of West Africa probably will not be dealing with the US dollar either now or in the future. All right. As a lot of the West is having a problem with certain Western African countries cutting them off from, I believe it is uranium primarily. But if they're cutting them off from uranium, which is highly problematic, if you know, I think like 1/3 of certain countries are, their energy is coming from from that type of energy. Let me just put it that way. I got to be careful with words on YouTube here. So the US dollar is in trouble. Not only that, didn't we just get a credit down rating as well? So let's continue on here. There's so much going on. We have to keep up with this news, so we know how the dollar's value is going to be affected. So it says here, a total of 10 financial sectors in the U.S. could be affected by the launch of a new Brics currency. They include banking, trade, tourism. They have the list. Let me just read the list. Number 1 is global financial system. New financial system coming in hot. Number 2, international trade and investment. Who's going to help with that? The bank coins. Number 3, just my humble opinion. Number 3, energy and commodity markets. So all of this is right up our alley. This is what we do. This is where we provide the solutions. The big money comes in. Number 4, banking and finance. Number 5, travel and tourism. Number 6, capital markets. Number 7, consumer goods and retail. Number 8, government and policy. That's going to be huge as well. Listen, I know voting is going to be at the forefront in the future, some future time. I don't know when. People want traceability on that, and I think so do other entities. But let's continue on. Number 9, technology and fintech. Number 10, production and consumption. That traceability, right? How much is this entity using? Are they using too much? Are they using too little? Where is it going? How much capital is flowing because of that? Where's that capital going to? How long do they want them to use that capital? Is there a timer on it? They could do something crazy like that. There's so many different things. So we're going to leave that one there. Let's move on here. All right. So now, this is from mortgagenewsdaily.com. Says here, mortgage rates are basically back to 9-month highs. Oh my goodness, my word. It says here, for all intents and purposes, the average 30-year fixed rate at the average lender is as high as it's been since November 2022. The number itself, as far as we can see, is 7.10, which means most lenders are quoting 7.125% after adjusting for discount points. My apologies. I don't know why my brain just went haywire right there. For example, a borrower could opt to pay just over 1% of the loan balance up front in order to drop the rate to 6.625%. Some lenders are quoting 6.625% with that extra upfront cost. Others are quoting 7.125% without the extra cost. The upward momentum in rates didn't draw on any specific news or developments today. Rather, markets are bracing for impact from upcoming economic data, as well as tomorrow's announcement of the latest borrowing amounts from the U.S. Treasury. Treasury issuance matters because treasuries are one of the most important determining factors for interest rates in the U.S. The more that are issued, the lower the price and the higher the yield/rate. Analysts know the amounts will be going up, and markets are nervous and uncertain about the amount of the increase. Once that's resolved, and if the week's remaining economic data paints a cooler picture for the economy, rates could easily recover. We're going to stop right there. Once again, that's on mortgagenewsdaily.com. Check them out. Ooh, there's a lot happening right now. And so now let's move on here. All right. So now this article here is from investors.com, and it's titled Dow Jones Slides 225 Points on U.S. Debt Downgrade. I was just talking about that. I knew we had a downgrade. Something was going on. Strong jobs data. Is that so? says Dow Jones Industrial Average slid 225 points Wednesday after Fitch downgraded the U.S.'s debt rating. Meanwhile, ADP's monthly payrolls report topped estimates early, with important oil inventories data due later in the morning. And Advanced Micro Devices AMD reversed sharply lower despite strong earnings results. Late Tuesday, Fitch downgraded the U.S.'s long-term foreign currency issuer default rating from AAA to AA+, saying it, quote, expected fiscal deterioration over the next 3 years. Wow. Early Wednesday, key employment data was reported with the release of the ADP's National Employment Report. July's private payrolls came in at 324,000, higher than the expected 185,000 estimate, and down from June's 497,000 number. ADP's employment report is a precursor to Friday's July payrolls report from the Labor Department. It says economists forecast a steady 3.6% unemployment rate for July and see employers adding 190,000 jobs, down from June, with a moderate gain in average hourly wages. All right, so I mean, there's so many things going on right now. I don't understand how certain things are going on, and yet they say that the economy is doing well, and like for another example, the banks are doing well, when clearly you look at what's going on and just something doesn't seem right. Things seem very wrong. Something seems rotten in Denmark. I'll say this with the job sector, right? So when they're going over these numbers about the jobs, are they taking into account all of the new people coming in? You get what I'm saying? There's like, they have to work at some point, I would think. So then you have to add those numbers to the numbers you already have. But then is that even feasible? Because I'm not sure if they were counting when new people were coming in. So I don't know how that works, but I think right now what a lot of the governmental entities are doing, they want to look good. They want to seem like they're doing their jobs, like everything's going well. So they're crunching the data however they can and negating certain other factual variables that would show the truth that they have a lot of work to do. There's a lot that needs to be repaired, and things are not as good, which is okay to acknowledge. If you can acknowledge that something is not going well, then you can repair it. You have to first acknowledge that there is a problem before you can fix the problem. That's how I look at it personally, just my humble opinion. So now, it says here, this is from kitco.com. This is a little bit of gold news, right? It says here, Securities sees gold prices driving. Oh, TD Securities. My apologies. TD Securities sees gold prices driving to $2,100 by the end of 2023. I'm all for it. I'm all for it. I probably will get a little bit. I might get a little bit more gold. I haven't bought some gold in a while. I feel comfortable, but before it explodes, and I think next year it could go way past that. Like I said, it depends on the banks. I'm surprised. Look, they did a good job keeping that banking information for those two banks that just failed, right? They did a good job suppressing that information so it didn't scare the people. Because if it would have scared the people and the media actually, did their job, no disrespect to media people, we might have a few watching. But if they did their job and reported that, gold would have went up, up, up. I don't think they're going to be able to suppress the news in the future, in my humble opinion, because it won't be just 1 or 2 weeks apart, right? It'll probably be 5, 6, 7, maybe in the grouping. There's just too many at risk, and that commercial real estate guillotine hasn't come down yet, and already they're falling. That's very interesting. But anyway, let's continue on here. So the gold market faces strong headwinds as persistent inflation and robust economic activity support the Federal Reserve's aggressive monetary policies. However, one bank still sees a path for gold to hit record highs by the end of the year. I agree. There's the possibility, right? It says Melek noted that gold has struggled as economic data has surprised to the upside. However, he expects to see a mean reversion in the market as rising interest rates start to bite and activity slows. Quote, the cyclicity. Wow, I've never seen that word before. Cyclicity and mean reverting nature of economic data surprises, along with the Fed's restrictive rate policies, should work in tandem to precipitate a downdrift in the U.S. economic surprise indices. unquote. He said in a report, quote, if the Fed fund futures reaction remains constant, dropping on negative data, surprises as it rose in response to positive surprises, the resulting lower yield along the forward curve should see gold rally. TD's bullish outlook on gold comes as the Federal Reserve has said that it is keeping its options open, and its monetary policy decision in September will depend on the incoming data. All right. I'm never worried about gold. I love gold. I'm going to say that. All right. So I expect big things in the future out of gold. But even if you negate the possibility of the explosion in price, it is such a great, trusted store of value. And that's the difference between gold and other so-called store of values. It can be trusted, right? Now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.